This video you'll find interesting, I'm sure, because you have clicked on it. So we'll be talking about what happens when a company declares a dividend. And stay with me till the end, because I'll also touch upon Alphabet shares and anti-avoidance provisions. And I also want to touch upon our view or our stance when it comes to how HMRC deal with such matters. Before we go on, don't forget to like, comment, share and subscribe. My name is Omar Aswat, Chartered Tax Advisor, owner of ASWATAX, a specialist UK and international tax advisory firm. So when a company declares a dividend, it is usually declared against a single or specific class of shares, right? What usually happens in practice is you'll have the business owner or the accountant, they'll set up a company, one ordinary £1 share. Now that's ridiculous, to be fair, because there's no future thought that's been given. What you'd rather look to do is, at the bare minimum, 100 ordinary £1 shares, and then you can have like 1,000, 1,000,000. You can have £1 shares, 1p shares, 10p shares, all that kind of thing. But ultimately, it's ordinary shares. So it's the same class of shares. There's no thought being given to any wider planning. When a company makes a profit of, let's say, £100,000 and they declare a dividend, those profits will have to be distributed evenly between all shareholders of the same class, right? So all shareholders will end up receiving £25,000 each. Now this keeps you very rigid and tight. It doesn't allow for any tax planning. What do you do in the instance where one shareholder doesn't need the funds, but the other shareholder or the holding company or a linked investment company, for example, needs additional funds? What happens in that situation? You're stuck, right? Because all shareholders are of the same class of share. Therefore, it is possible to create separate classes of shares. So for example, you have ordinary A shares, ordinary B shares, C shares, D shares, and the list goes on. And what do we have? We have Alphabet shares, as you can tell from the name. This therefore allows you to be selective when voting dividends, because a dividend voted on the A shares has no impact whatsoever on dividends voted on B shares. And this works very well in practice when we're looking at things like family investment companies. You have different family members, you have the mother, the father. Let's say you have 3 children. They can all potentially have separate classes of shares. Or you might have a key employee. So when we're looking at share schemes, for example, the share scheme has a different share class. For example, A shares, B shares, and then C shares for the share scheme, as an example. Ultimately, it allows for the flexibility when distributing dividends from a company. There are anti-avoidance provisions you must be mindful of when paying dividends under such structures, and this is where our expertise and guidance, clients really appreciate our guidance, holding their hands when advising on and implementing such structures. But then also, from 40,000 feet in the air, we're just making sure everything is going smoothly. HMRC guidance suggests that where the amount of dividend paid on a particular class of share could not have been made unless no dividends were paid on the other classes of shares, then HMRC may seek to attack under the settlements provision. So that's the anti-avoidance provision. In our view, as I mentioned, I'll give our view. In our view, our experience, HMRC typically only challenge such arrangements in more aggressive structures where employees, for example, are given Alphabet shares with no voting rights. Okay, that's one. Or where contractual salary has clearly been disguised as dividend payment. So in our view, although there's the settlements legislation, there's other anti-avoidance provisions, usually it's in the very aggressive structures, and we don't even look twice at those. We keep everything as fair as possible. It's important that you reach out for a chat. I hope everything made sense. Effectively, we discussed what happens when a company declares a dividend. We discussed Alphabet shares. Don't forget to like, comment, share and subscribe. omar@aswatax.co.uk. As a team, we are well versed in assisting you in any tax matter. Don't forget to reach out. I look forward to speaking with you. See you soon. Take care.